Welcome to the only daily podcast focusing on compliance news of the day. Each morning, start your day with a cup of coffee and Tom Fox, the voice of compliance, to hear about 4 of the top compliance, corruption, or leadership stories you will need to start your day. The Daily Compliance News is a production of the Compliance Podcast Network.
First, a word from our sponsor. The Daily Compliance News for December 3, 2021, the Recidivists on Notice edition. We begin with that story from the Wall Street Journal at the National ACI FCPA conference today, or rather yesterday. Representatives from the Department of Justice made clear that they will look at companies' prior behavior when assessing penalties and enforcement actions for FCPA or other white-collar crime. Officials defended the new stance on corporate recidivism. Obviously, white-collar defense lawyers were skeptical, but as David Last, the chief of the FCPA unit, said, as a baseline, we're going to be starting from the perspective that it's all potentially relevant. This continues. It's not a new change because Deputy Attorney General Lisa Monaco announced it back in October, but it sure caused a lot of consternation and gnashing of teeth from corporations. Next up from the New York Times Deal Book, the current SEC chair, Gary Gensler, and the former SEC chair, Jay Clayton, were on a panel Wednesday at the Digital Asset Compliance and Market Integrity Summit and actually spoke together. And they expressed their views on regulating cryptocurrency. And if you've read their views, you know they're basically the same. I was going to say rather amazingly the same, but not really too surprising. Both fairly conservative in their approach. And their approach is that it has to be regulated as a currency and it has to be regulated as an investment if you hold it for an investment. They both really agreed it meets the time-tested definition of an investment contract and are thus securities laws. So it should be regulated by the Securities and Exchange Commission, obviously much to the consternation of the cryptocurrency community. Next up from Bloomberg, the Chinese company Didi is preparing to delist in the United States so they don't have to comply with U.S. securities laws, and is probably the first of several Chinese companies who don't want to follow U.S. law, so they are delisting from U.S. capital markets. What that does for U.S. investors is obviously an open question. And finally, in Reuters, a U.S. judge on Tuesday questioned whether members of the Sackler family who owned Purdue Pharma abused the bankruptcy consideration as she's considering overturning a ruling that shields the Sacklers from personal liability. She said that she wanted more information about the $10 billion the Sacklers had contributing, and specifically she's looking for any evidence of abuse by the Sacklers in hiding assets through the bankruptcy process. Obviously, this is a blow to the Sacklers, and if they have to face this scrutiny, it could well overturn the prohibition against them directly. The Daily Compliance News is a production of the Compliance Podcast Network and a proud member of C-Suite Radio. Thanks so much for listening. I hope you'll join me again tomorrow.
This podcast is a part of the C-Suite Radio Network. For more top business podcasts, visit c-suiteradio.com.